What is going on, everybody? Paul here, coming at you with your crypto coffee update. A few hours late here today, had some things I had to take care of on my end, but nonetheless, consistency is key, and here we are, of course, as usual, with some coffee, this time in a fine china cup, so kick it up with me. Always look forward to that simultaneous sip, guys. Let's go ahead and jump into the news. So, Mitchell Moose has been killing it with these articles recently, coming out of Crypto Slate, so cheers to him, doing great work over there. Fantastic write-up talking about how ICOs are now taking advantage of a 2015 SEC regulation where they can raise up to $50 million. We're talking about a Class A, Regulation A situation, which essentially, as stated, allows for a raise between $1 and $50 million. This has been a huge topic of conversation, how ICOs can legitimately raise money, especially in the regulatory verbose region of the United States, and it seems as though this is starting to become a more popular option as the smoke settles and things become more clear as to what the best way to raise capital is. You can see here most of the time individual companies may attempt to create a utility token rather than a security token. However, ex post facto, if something happens where it is indeed deemed a security, then essentially these companies are left with the option of refunding all of users' money and restarting, essentially, or face some legal penalties. So it's not the best option, and because of that, the Regulation D and Regulation A, as stated, are becoming more popular. Well, we're not going to go through every component of Regulation D and Regulation A. Really just wanted to put this out into the forefront because Mitchell makes a great point that this is becoming a more popular option. And here's a bit more of a detailed overlook from a Medium article from Steven. I'm not even going to try and say his last name. Much love, dude. Sorry. I'm going to do it. Hidachak. Let me know. Did I do it right? Did I do okay? All right. But point of the matter being, guys, you have Regulation A+, Regulation S, Regulation CF. Sounds like alphabet soup. What does it mean? As said, for the sake of brevity, we're not going to go through all of this, but it's here for you below in the description so you guys can get a better idea as to if you're looking at starting a project, if it's something that interests you, or as said, we're trying to do a back to basics movement, how you can best communicate what legitimate options are on the table for individuals who you may know in your own life who are looking to start perhaps their own ICO or their own crypto-based project. After all, knowledge is the anathema to worry and anxiety, and this could be helpful to somebody out there. So sharing is caring. Moving along. Really cool development coming out of the Ethereum community, talking about the ERC-865 token. I know we talk a lot about ERC-20 and ERC-721, fungible and non-fungible Ethereum tokens, but turns out there is a smorgasbord of other selections for individuals to use when working with the Ethereum network. Of course, this includes Engine Coin's new ERC-1155, which is 1155, which allows for, as I understand it, multiple transactions to occur in basically one smart contract, which is revolutionary, saves a lot of space, allows for potentially gaming on the blockchain. That's neat. Well, today we have ERC-865 coming out, and what that does is it allows for the payment of the TX fee in an ERC-20, but the final gas is still paid in ETH. So essentially what that means is, I'll use my favorite video hosting site Viewly as an example. If I want to, which I definitely do, upload this video to Viewly after the fact, I have to have both View tokens and some Ethereum to pay for the gas fee. Well, it seems that this ERC-865 contract allows individuals to pay, in our example, just View tokens, and so long as the node is running this ERC-865 contract, if they agree to accept these View tokens, and in turn, attest that data to the chain, paying the Ethereum fee for gas, then voila, we have ourselves a deal. This has some huge potential implications for end user experience, really smooths things out, means you don't have to have Ethereum plus an additional token, and if this becomes popular, that could really, really help to ease the user experience, since paying two different currencies doesn't make too much sense. It's kind of like going to your grocery store. Let's say you're in the good old US of A, you want to slap some dollaroonies down on the table, boom, pay for your groceries, but if you don't have yen to pay the transaction fee that is required for scanning your groceries, well then, sorry guys, it doesn't make much sense, not very user friendly, and it's really encouraging to see these kind of developments coming out of the Ethereum community to help to ease some of those burdens. So, moving right along, the notorious alt-right Twitter known as Gab has moved over to Bitcoin, thanks to some blacklisting from banks. This occurs after a horrible tragedy that occurred in New York, a shooting in a synagogue. Gab was largely blamed for this for some reason. It was a sickening individual who had just disgusting anti-Semitic beliefs. He used Gab as a platform and of course carried out this atrocious act, but Gab really received a lot of flack for this, for allowing this individual to maintain this caliber of speech on their platform. So This gets into a tricky situation that's not the subject of today's discussion. Really, the point is that it allows individuals to move over to something else when banks blacklist them. This is not the first time we've seen this. Julian Assange over down in Ecuador, he's had a lot of issues with WikiLeaks. After all, no self-respecting bank is going to want to get in the way of the United States' interest because it doesn't bode well, right? So suffice to say, they need to find a way to raise money. WikiLeaks looked to Bitcoin in 2011. So they made a good amount of money off of that, huge amounts of appreciation, so I guess the blacklisting of banks in that situation backfired. However, what do you guys think of this? What do you think of these alternative, I guess, outlets, such as Gab, using Bitcoin as a primary means of raising money now that you're seeing a kind of blacklist attempt just based on politics? So trying to remain as apolitical as possible here, not something that particularly interests me, but what do you guys think? I'm curious to hear your thoughts. Let's move right along here, see how we're doing on time. Looking great. All right, so Amber Baldet said, "Don't force public blockchains down enterprises' throats." This received a lot of mixed reactions, and I can understand why. The idea is no one's really forcing it down enterprises' throats. It's really just a market option. However, this kind of runs contrary to what some enterprise and institutional individuals experience when attempting to gain information about the field. As I said, we really need a back-to-basics movement, just due to the fact that decentralization really is the future. It's super important. Distributed systems are going to revolutionize how we interact with digital technology. However, there needs to be some middle ground. There needs to be a transition period by which and in which these enterprises and institutional entities can begin to acclimate to this technology, using it for their existing business models as they transition into a more decentralized future. And I think this is really what Amber's trying to drive home here. Some individuals are very ardent about distributed systems being the be-all, end-all, despite them being only a decade old at best, and at worst, perhaps less than half a decade old. So not a lot of time to be tried and true. I've said before on this channel that humans as a whole, oftentimes we overestimate the short-term implications of a new technology, but obversely we underestimate the long-term implications, thereby meaning that these institutions, of course, are keeping an eye on this kind of technology, but such ardent support for these distributed systems that are not yet tried and true and proven over the long term, it doesn't really bode well for them, and it often sows more confusion in the minds of the individuals who are running these enterprises. So a kind of a meet-in-the-middle approach may well prove to facilitate a more expedient adoption of distributed systems, but that's neither here nor there. Just wanted to put this out there for you guys, say what Amber was putting out there, and get your thoughts on it as well. Drop me a comment. What do you think about this middle ground we're talking about? And just kind of getting into the whole price action talk, don't want to harp on the price. You can see here it's below 4,000, no big deal, such as life. Institutional investors accumulating while retail investors panic. Could that indeed be the case? After all, we saw Fidelity examining crypto all the way back in February 2015. So they were checking this, or was it 14? Yeah, it was February 2014. They started mining in 2015. So they've been in this for a while. And the fact that it's such a large investment institution bodes well for the future of not just Bitcoin, but cryptocurrency as a whole, in my humble opinion. And this article goes into some great detail talking about just that. Are institutions really buying? I was on Twitter just earlier today, and an individual was saying, I'm in a room of 100 plus institutional investors, and the only talk is what is up with cryptocurrency, how does this whole thing work? So as stated from the previous article, these institutions, these individuals at the helms of these institutions are beginning to absorb and understand this information. You can see here the Fidelity Digital Assets subject that's cited in this article. So really a lot of these things are running concurrent and echoing what we've already talked about on this channel, and this very well seems to be the case given the precedent. Crypto and blockchain venture capital investments skyrocket. That's helping to support this claim. You can see here it's gone up 316% from a total of about 900 million to over 3.85 billion in 2018. Keeping in mind that the crypto prices began to see this downturn in Q1 of 2018, it seems as though institutional investors and venture capitalists have been buying all the way down. So it kind of echoes Warren Buffett's statement, buy when there's blood in the streets, and indeed we've seen nothing but a sea of red recently. So if our hypothesis that institutional investors are keeping an eye on the space during this downturn holds true, then this piece of information helps to corroborate that claim. Moving right along, it seems as though that it's not just institutions, it's governments themselves that are beginning to look towards using cryptocurrencies as a competitive payment medium, specifically for accepting taxation, right? That's what governments do. Again, Mitchell Moose killing it with these articles, man. Ohio is the first state to accept Bitcoin, which is really pretty fantastic. You know, Wyoming recently passed some regulation back in, I think it was late 2017, early 2018, saying this is basically the framework by which you can launch your ICO here. But Ohio is taking it a step further, saying that they are accepting payments in 23 kinds of business taxes. So they're rolling this out for businesses first. Makes sense. Those are the institutions that are largely going to be the most well equipped to handle this sort of thing, given the comparatively difficult tax burden and structure that businesses must undertake. Then, if that works out well, they will roll it out for individuals, assumingly. So, really cool stuff, but suffice to say, they're keeping an eye on cryptocurrency, and it's not going away. Even if this little yellow Bitcoin you see here on this building, if that switches to something else in the future, that's just what'll happen, perhaps, who knows, but suffice to say the technology is here to stay. That's the big takeaway, just from my humble opinion. And also, the U.S. military is keeping an eye on it as well. Yep, so the research arm DARPA, the same group that incubated and helped to, birth the internet as it stands today. Of course, huge amounts of innovation on top of that. Looks nothing like DARPANet, but nonetheless, the US government indeed had a major hand in starting the internet. So the fact that DARPA is keeping an eye on blockchain as well really means a lot in terms of, you know, how these distributed consensus protocols, as said here, and how these distributed systems can continue to impact not only individuals, but how governments function, how governments track data. And considering the Pentagon recently failed its first audit, they're calling it an audit, really they just requested information from the Pentagon. Pentagon gave them the information they requested that they deemed sufficient, and they said, yeah, even the information that you voluntarily handed over, it doesn't look good in terms of your record keeping and your books. So yeah, you take that for what it's worth. Hopefully distributed systems can help with that. Also, shout out to John Yui, always writing those consistent good articles. I keep an eye on the authors just to see who sticks around through the bear market, see who's consistently trying to push out quality. John's one of those guys. So cheers to you, John. And of course, provided the source, as always, very important. One of the reasons I love John, drops in the source. Here it is, the RFI applications and barriers to consensus protocols. ABC, completely unrelated to Bitcoin Cash ABC. I know we've been talking about that semi-frequently as well. So you can check this out in the description. Everything's going to be linked as usual for you guys. It's how I try and help y'all do your own research, and sharing is caring. As said, look below in the comments and drop me something. Let me know what you find. Let me know any information you come across you find interesting, and most of all, let me know your opinion. That's how we really grow the space to be the best it could possibly be, as I try and hammer home consistently. Sharing is caring. So let's go ahead and check out what's happening in the news and events for November 26th and 27th. We are winding down the year, folks. All right, so what do we have for November 26th? Monday, we have Payment International occurring in London. The Money Live Summit 2018 kicking off in London as well. The Beyond Block Summit is happening in Bangkok. UCIM is happening in Singapore. MoonTech 2018 in Estonia. The Australian Payment Summit is kicking off in Sydney. Crypto Rockstars occurring in Germany. And Blockchain Academy Europe is happening in Luxembourg. Oh, and the Security Standardization Research, or SSR 2018, in Germany as well. A lot of stuff for Monday, November 26th, as well for November 27th, Tuesday. So, on Tuesday we have Consensus Invest 2018 in New York. CNBC is hosting an East Tech West conference in China. Asia Blockchain Week is in Singapore. Blockchain Summit Dubai in, of course, Dubai. TrusTech France is happening in, of course, France. Open Banking Expo in London, as is the FFE Conference 2018 in London as well. And the Finovate Africa Conference happening in Cape Town, along with the Blockchain 2 Energy Asia occurring in Singapore. So that's all we have for this Crypto Coffee update. Lots of stuff happening early this week, guys. Let me know if you're able to get out to any of those and how it was. But for now, my name is Paul, signing off. Much love. We are Cryptide, and remember, guys, the tide is rising, as is the conferences. Dang.